Hi, in this video, I'm going to talk about life insurance policy provisions. There are some common clauses in those provisions, say grace period, reinstatement clause, contestable clause, suicide clause, misstatement of age clause, conversion clause. So let's see what are they. So grace period and reinstatement clause. So grace period basically say this provides that the premium received within 30 days or 31 days after the due date are treated as though received on time. This clause also states that if the premium are not received in that time frame, the policy will lapse. So basically say, sometimes life getting busy, you forget to pay the premium, right? So let's just say you have a whole life policy, you have fixed the premium monthly, let's just say you pay $1,000 per month. Then so you supposed the premium due at the end of this month, but you forget to pay. So as long as you pay by the end of next month, so you are good. You are all the policy are good in place. So that's the grace period. So however, if by end of next month you still not paying your premium, so your policy will lapse. When your policy lapse, then we talk about in other videos, there's called automatic premium loan. So if you have a cash value policy, so the automatic premium loan clause will allow the insurance company to take the cash value to pay the premium to help your policy stay in place. However, if your term insurance, you purely rely on the grace period. So there's no cash value, no automatic premium loan can be used. So in that case, if after grace period, your policy lapse, then if you want to, you will say, okay, I totally forget, so how can I get back on my policy? So this is through the reinstatement clause. So the reinstatement clause normally follows the grace period clause. With most companies, it provides that once the policy has lapsed, the owner may reinstate it by the paying all back the premiums, paying off the reinstating any policy loans that exist at the time of the lapse, and providing the proof of the insurability satisfactory to the company. Well, if you only left, for 2 or 3 months, it's worthwhile. You can just pay back all the premium. If you left for like 2 or 3 years, probably is you should just get a new policy, because they're gonna require you to provide a proof of insurability. So you're gonna go through underwriting again. No insurance coverage will have been in place from the date lapse to the date all the reinstatement requirements are submitted. So basically, if 2 or 3 months, within this 2 or 3 months you die, your beneficiary won't get death benefit. Basically, that's that mean. So upon lapse, so following reinstatement, some companies begin a new 4-term contestable period. We're going to talk about the contestable period later. So yeah, you basically feel like a new policy again. No company will allow reinstatement if the policy has been surrendered for its cash value. So that's a grace period and reinstatement clause. Let's see the next. We talk about mentioned the contestable clause, and we're going to talk about suicide clause. Contestable clause, so basically say once a life insurance policy is issued, the insurance company has no more than 2 years, some states specifically 1 year, to determine if there's any reason that should not have issued that policy. If the insured dies within the 1 or 2 years limit, the clock stops, and the insurance can take any reasonable amount of the time required to investigate and determine if there was any material misrepresentation or concealment in the application. Okay, what does I try to say here? Contestable clause. So basically say for 2 years, so you are a person want to purchase a life insurance, right? Sometimes people purchase life insurance have a good intention, to provide it for a family. Some of them, they are not. Some of them, they say, okay, I get diagnosed of cancer, cannot live, for a year. I'm going to go to buy a life insurance. Then won't tell the life insurance company say you have a cancer, going to die within a year. So in that situation, so that's why, insurance company need this, so contestable clause. So basically say, the insurance allow 2 years, once the policy issued, within these 2 years, if the insurance company find, any misrepresentation in your policy, you concealed any facts, so they can cancel the policy. So that's something like that. So if you die within these 2 years, now the insurance have a unlimited time to investigate, see if you have a material concealment. You didn't tell insurance you had a cancer, you're going to die a year. So if they find that that's true, they are not obligated to pay your, 2 million or 10 million benefit, death benefit. So that's something. Fraud maybe have no statute of limitation. In some cases, a fraudulent application allows the insurance company to avoid payment of the death benefit claim even beyond the 2-year contestable period. Purely fraudulent claims are likely to be contestable at any time, submitting a death claim for someone who is alive. So basically that's say, well, the basically statute of limitation contestable period is 2 years. If it's a fraudulent application, there's no statute of limitation. So basically this 2 years does not apply to the fraudulent application. So that's just some information about this contestable clause. Then suicide clause. Of course, this is life insurance. Someone commits suicide. Should the insurance company pay you? So the majority of the policy will pay a death benefit if the insured commits suicide. So they do pay you. However, so under the suicide clause, if the insured commits suicide within 1 or 2 years, again, this vary by the states. After the policy was issued, the insurance company may only return the accumulated premium minus any indebtedness. Some company also pays interest. Once the 1 or 2 years passes, the suicide is treated as any other death. So, okay, is 2 years. Let's put a 2 years suicide clause. Someone is, they want to kill themselves. They want to leave the death benefit to their family. So they go to insurance company, buy a, life insurance policy. Then your family get a $1 million death benefit. Well, this thing happens is on the, in the movie a lot. So anyway, just remember, you cannot kill yourself within 2 years. Hope you change your mind within 2 years. Don't kill yourself. However, in the Missouri, the only states there's no suicide clause, require insurance company to prove that insured intended to commit suicide before purchasing the policy. That's very difficult to prove. Okay, people, you don't go to Missouri to kill yourself by life insurance. Okay, so even they don't have a suicide clause. This is very interesting. Then misstatement of age and conversion clause. Apparently, age is very important to the insurance company. So this provides that if at a death, the insured turns out to be older or younger than indicated on the application, the benefit will be adjusted to provide the amount of the premium will have provided for at the correct age. So basically, insurance is, they pull the people together to issue the life insurance. They have a life expectancy. So if the age difference, the death benefit kind of different as well. So that's, they try to say, if, somehow, the age get misstated, so then they find out at the time the death benefit has to be, paid. They can correct the death benefit amount based on the correct age. Conversion clause. So this most is for term insurance policies. Frequently includes the provisions that permit the policy owner to convert the term insurance into the cash value form of the insurance. Well, it's so basically term insurance is a lot cheaper. You can buy $1 million term insurance based on your age at 25. You can get, monthly payment, let's say $150 or, even less than that. So then you'll get your whole life is fixed premium for entire life. So that probably costs you $2,000 or $3,000 per month to pay the $1 million policy. So you can see people more have incentive by the term insurance when they were young. So when they get older, they may not insurable in the future. They want to have the ability to convert their term insurance into a whole life insurance. So this clause often limits the conversion to the specific form of the cash value insurance. Usually permit the conversion only up to the policy anniversary nearest to the insured age 65. So basically all kinds of limitations. Some low-cost term insurance policy further limit the conversion rate or excluded altogether. When the conversion rate is restricted, it is often limited to first 5 years or also after issue date original term. So if you want to convert, just make sure you find out what's the limitation, because a lot of times they may limit you how can you convert to the whole life, basically cash value life insurance.